Hello, I'm Stupnytska, Global Macroeconomist at Fidelity International. Today the topic of my presentation is vaccines and the Greek alphabet. Alpha, Beta, Gamma, Delta, Omicron, we have all had to refresh our knowledge of the ancient Greek alphabet as the COVID pandemic unfolded over the past 2 years. 2 years on, the key question now is, are we moving to an endemic phase of the virus in 2022? Omicron's more transmissible nature has led to a record surge in cases globally, but its milder symptom severity has undoubtedly been good news. But there doesn't seem to be enough evidence just yet to suggest that a more manageable endemic phase is upon us. But experts point to new oral antiviral drugs as a potential game changer. We will find out more on that later in the year. But in the meantime, we do believe that another virus variant, especially if proved to be more severe than Omicron, remains one of the top risks to economies and markets this year. It would likely increase the strain on supply chains, put pressure on labor markets, resulting in higher and more persistent inflation, and that would in turn put more pressure on central banks to tighten policy. This is the policy dilemma that we have termed Catch-22, facing central banks and governments in 2022. As inflationary pressures strengthen, policymakers are challenged to protect their credibility on inflation. But at the same time, as downside risks to growth increase, they are forced to walk a very fine line between the risks of over-tightening policy and the risks of under-tightening policy. And there is also a much higher debt burden constraining room for policy maneuver in the aftermath of the pandemic. So we believe that central banks will continue, for the time being, to validate that hawkish pricing by the markets until inflation momentum turns, and that should allow for much less aggressive tightening in the second half of this year and beyond. But in the short term, real rates are likely to rise even further, potentially moving out of the negative territory, and that will tighten financial conditions and put pressure on central banks to potentially do a U-turn and become more dovish yet again. We believe that medium-term rates, real rates, have to remain in the negative territory given the very heavy debt load in developed markets. But for now, risks are skewed towards too much policy tightening, which might lead to a serious downturn in 2023. We're also watching another policy dilemma that is happening in China, where the ongoing easing of policy is expected to continue, and the likelihood of extreme downside risks to growth has fallen. However, we don't expect a lot of easing to happen in China because the policymakers there are also facing Catch-22 that involves the zero COVID policy that is weighing on growth, and also a limited appetite for significant easing given the longer-term goals of common prosperity. So overall, a highly complex picture ahead of us as liquidity gets withdrawn and investors will try to navigate this moving and fluid environment in the markets. So to summarize, the key takeaways are: virus mutations remain one of the top risks for markets and economists as 2022 unfolds. Policymakers are facing a catch-22 this year as growth and inflation outcomes later in the year will very much be determined by their policy choices. We think that the risk of recession for the time being looks quite low, but we are watching it very closely, and this is our focus for the rest of the year. Thank you very much for listening.